Jeremy Grantham has called the last three bubbles right. Japan in '89, .com in 2000, and the housing crash in '07. In June of this year, he said something on Diary of a CEO that should have gotten more attention than it did. He's not confident US stocks will even remain intact in 5 or 10 years. His advice, 0 US equities, 60% somewhere else. I'm Edward. I spent years as a Hollywood producer before moving to South America. And these days, part of my actual job is finding international investments for my family's firm. This show is me doing the same hunt out loud in public. This is Money Beyond Borders. Let's go. Now, Grantham's not saying sell everything American. He's much more precise than that, as you would expect from a billionaire investor. His actual position is to avoid broad US indices, which he thinks are dangerously concentrated in overvalued growth and AI names, while he's still long on high-quality, low-debt US companies and resources. He's rotating hard into value, resources, and emerging markets, not fleeing the US entirely. And here's the number that got my attention. Over the last 12 months, while the S&P put up a respectable gain, emerging market indices have surged over 40%. We're seeing a real rotation, and almost none of the mainstream US business media is covering where the money's landing. I'm not telling you to panic sell anything. I'm telling you that there's a real serious and well-credentialed case that the next decade of returns doesn't look like the last one, and almost no one's covering where the money might go instead. So let's start with a company most Americans have never heard of, but's bigger than you'd guess. MercadoLibre, ticker MELI on the NASDAQ, roughly 90 billion with a B in market value. That's not a small cap gamble. That's a company more valuable than most names on the S&P. It's Latin America's version of Amazon, eBay, and PayPal all mashed into one. Marketplace, logistics, and Mercado Pago, their fintech arm, all under one roof across 18 countries. And Mercado Pago is the real moat here, not just a nice add-on. In a region where a huge share of the population is unbanked, Mercado Pago isn't some PayPal clone people use occasionally. For a lot of people down here, it's how they pay utility bills, get paid, and manage their money day to day. That's the thing that justifies the valuation. It's not just an e-commerce option, it's often somebody's actual bank. Here's my personal angle on this one. I'm actually looking to buy a car on Mercado Libre right now. It's like Amazon, but you can buy cars, houses, rent, or buy. Which makes me laugh because it's not just the Amazon of Latin America. It's Amazon plus a Craigslist plus a bank all in one. And there's a dumb little irony I can't get past. They call it the Amazon of South America, when the actual Amazon, the river, is in South America. Maybe Bezos didn't know he would get this big. Maybe he did. When I first moved to South America 7 years ago, buying anything online felt like a gamble. Stuff just wouldn't show up sometimes. Kind of like in the old days of eBay, or even before that, just email, when you would trade widespread panic cassettes with some stranger and you'd send yours and theirs would never arrive. But that's not really true anymore. They got their act together. They have much better third-party validations. That shift from risky to just works is exactly the kind of thing that doesn't show up on a US analyst report, but matters enormously if you're trying to figure out if this company is for real. All right, now the fun part of the show, where we're actually going to do some paper trading. Paper trading, of course, is with funny money or credits or monopoly money or whatever you want to call it, but the software trading view treats it like the real thing. All right, now the fun part, we get to play around with trading view graphs. All right, so you see we're in MELI right here, Mercado Libre, MELI, and it's on the NASDAQ, trading right now around 18.8. Subsequently, in future episodes, as we buy each thing, we're going to review how the previous positions are doing, and starting with just the regular, let's see, you can see right here, just the regular paper trade gives you 100,000 in your account balance. This is not real money, this is just for educational purposes. And so we're going to buy 10,000 of each stock that we talk about. And that way it'll be even across the board, because if you were to buy 10,000 of this, the stock, as you see, is still pretty expensive, just one stock relative to a lot of other stocks. At 1885, you know, we're only going to get like 5.3 stocks for that. You can see back in mid 2025, you know, this thing's riding high. Peaked around 26.15. Then it starts sliding through the second half of the year all the way down to March. And now it's already down a serious chunk. And then in May, boom, falls off a cliff. So let's go to the earnings report. There's an earnings report right here, very handy. Let's see, revenue 8.85 billion reported against an estimate of 8.35. So that's a beat, you know, nearly 6% above what analysts expected. Revenue grew 49% year over year, the fastest growth in 4 years. Earnings, though, 8.23 reported against an estimate of 8.5, a miss, 3.2% below expectations. Net income fell 16%. So think about that for a second. Revenue up 49%, stock drops 13% in a single day. Why? Well, because they're scaling their credit card business so fast, their credit portfolio nearly doubled in a quarter. Accounting rules force them to book loan losses up front before the income even shows up. Add in expanded free shipping, again following Amazon's model, and a giant logistics build out in Brazil, and short-term profit took a big hit on purpose to buy back long-term market share. And look, since then, it's been climbing back up. There you see it all in this chart. Great business, ugly quarter, market overreacts, market corrects. All right, so now we'll go ahead and buy, it dropped a little bit since we've been here. So we're going to buy, everyone, like I said, we're gonna do 10,000. And 5.31 shares. And again, this is for educational purposes. This is not real money. We're paper trading. If you don't know how that works, you know, you should try it. It's a good way to practice if you don't know how to trade. Also, we want to make sure this is a market order. Yeah, because we don't want to do limit or stop. So we're doing a market order. Everything on this is as simple as possible. Oh, I put in an extra, whatever. Our goal here is comparison and education. So the trade value, 10,000. Our leverage 1-to-1. We're not changing anything. Buy. All right. So now it'll go down here. Order. So we got that. Placing. So you can see how paper trading works like almost exactly the same as the real deal, which is cool. And it's perfect for what we're going to do. Anyways, we used 10,000 of our 100,000 funny money credits to buy MELI, M-E-L-I. And there you go. That's episode 1. What we'll do here every few days is introduce another international company you've probably never heard of, and an honest take on how they're doing, and we'll follow them in our paper portfolio. Before you go, I'm not a financial advisor, and nothing here is personalized financial advice. The research is just what I'm doing for work. Sharing it publicly doesn't turn it into a recommendation for your money. This is research, frameworks, and education. Not real money, not a track record. Talk to a licensed professional before you do anything on your own. See you in a few days.